Hi everyone. Today I am doing problem 11A from homework 2 in chapter 12, and it starts with the comparative balance sheets for Sheridan Company as of December 31st are presented below. And then we have the comparative balance sheets and we have some additional information here. And what we need to do is we need to figure out the statement of cash flows. I did add right here, I added the change if it was an increase or a decrease, and that's just going to help us as we go through our statement of cash flows. So I've already filled out the accounts that everything goes to, but I will go over that really quick. So we have the Sheridan Company statement of cash flows, and it's for the year ended December 31st, 2017. And we have the cash flows from operating expenses. We have our net income, and then we're going to adjustments to reconcile net income to, and we have net cash provided by operating expenses, depreciation expense, loss on disposal of plant assets, decrease in accounts receivable, increase in inventory, decrease in prepaid expenses, increase in accounts payable, and all of that will give us our net cash provided by operating expenses. And then we'll go to our cash flow from investing activities, which has the sale of equipment, sale of land, purchase equipment, and we'll get our net cash used by investing activities. The cash flow from financing activities will have our payments of dividends, and then we'll come to our net increase in cash, our cash at the beginning of the period, our cash at the end of the period, and then at the very end, we have our non-cash investing and financing activities, which include the acquired land by issuance of common stock. So let's get started. Our net income tells us in number 4 over here in our additional information, it says that the net income was $60,716. And our depreciation expense, also in the additional income, in number 1, tells us that our depreciation expense was $68,922. We have our loss on disposal of plant assets, and this is from number 5 of our additional information. It shows us that our equipment had a book value of $16,410, but it was sold for $13,128. So I'm just going to do 16,410 minus 13,128. And that will give us our loss of 3,282. And then we have our decrease in accounts receivable. And that, if you come over here and look, the difference is 13,128. So we'll put that there. And then we have an increase in inventory, and this is going to be a negative 15,507. And in the book, it says that the change in the inventory account reflects the difference between the amount of inventory purchased and the amount sold. And so this means that the cost of merchandise purchased exceeded the cost of the goods sold, and in this case by 15,507. So we deduct that amount from our net income. And then we have our decrease in prepaid expenses, which is going to be it's going to be 9,387. And then we're going to have our increase in accounts payable, which is 14,326. And that is going to give us, what we're going to do is we're going to add all of these. And that's going to give us 93,538. Now we're going to take our net income and we're going to add this amount. and that's going to give us our net cash provided by operating activities. Now we need to go to our investing activities. And we have the sale of equipment. And if you look at number 5 over here, it says that equipment was sold for $13,128. So that's what our sale of equipment is going to be. It's going to be $13,128. Now the sale of land, this is a little tricky and I did have problems with this, but what you're going to do is you're going to take your I'm going to make this equal. We're going to take our 2016 amount and we're going to add, and if you look down here in number 6, it says that, let me move that up a little bit. It says that 65,640 shares of $1 par common value common stock were issued in exchange for land with a fair value of 65,640. So we're going to add that $65,640 to our 2016 price, and then we're going to subtract our 2017 land, and that is going to give us our sale of land at $41,025. Next, we have our purchase equipment. And we're going to go back to number 5 over here, and it says that the equipment was purchased for $150,972. So we have $150,972, and then the net cash is, we're just going to add, oh, I forgot this, because we purchased equipment. Let me go back to this. This needs to be a negative. So negative $1,050, 972. And now we're going to just add all of these up together. And we have a negative 96,819. Now we have our payment of dividends. And if we come and we look at our additional information, it tells us that cash dividends of 19,692 were paid. So we'll put 19,692. Now our net increase in cash is, we're going to take, and once again, and this is very important, I forgot to do the negative because we're paying it out. So make sure you do your negatives and your positives. So you're going to take your net cash from operating expenses and add it to your net cash used by investing activities and your cash flow from financing activities. So your net increase in cash is $37,743. Now your cash at the beginning of the period, you're going to go back up here and you're going to look at your ending cash for 2016, and that is going to become your beginning cash for 2017, or your beginning cash for your ending, your beginning cash for 2017. So that's going to be 73,845. So your cash at the end of the period, you're just going to add these two. So we have 111,588. And then we still have our non-cash investing and financing activities. And if you come over here to number 6, it shows that they didn't purchase the land with cash, they purchased it with shares, with common stock. So that's what we need to put in here, because it's not cash value. We're going to put 65,640. And that is our statement of cash flows. I'll do it slowly so everyone can see again. Let me know if you have any questions. Thank you.